Everyone thinks tax havens are built on secrecy. They're wrong. They're built on deliberate, meticulous legal architecture. The story of the Cayman Islands as a financial powerhouse isn't one of natural resources or vast industry. Instead, it's a tale of calculated legislative choices, transforming a quiet British colony into a global financial nexus. Its journey began subtly, rooted in a pragmatic approach to governance and an understanding of the burgeoning global economy. For centuries, the Cayman Islands remained largely overlooked. A handful of settlers, pirates, and fishermen dotted its shores. Its strategic importance was minimal, its economy agrarian. Yet, this very obscurity would, paradoxically, become one of its greatest assets in the mid-20th century. The foundational shift began in the 1960s. As Britain began to decolonize, the Cayman Islands, then a dependency of Jamaica, chose a different path. When Jamaica gained independence in 1962, the Caymans opted to remain a British Crown colony. This decision offered political stability, a crucial element for attracting international finance. But stability alone doesn't create a tax haven. The key was the proactive legislative framework. In 1966, the Cayman Islands enacted the Banks and Trust Companies Law. This legislation, followed by others like the Confidential Relationships Preservation Law in 1976, provided stringent privacy protections for financial transactions. These laws weren't accidental. They were a deliberate response to a global need. As international trade and investment grew, so did the demand for jurisdictions offering low taxation and robust confidentiality. The Caymans positioned themselves to meet this demand, offering an attractive alternative to more heavily regulated financial centers. The absence of direct taxation was a primary draw. There's no corporate income tax, no capital gains tax, no wealth tax, and no inheritance tax in the Cayman Islands. This fiscal policy, combined with a stable legal system based on English common law, created a powerful magnet for capital. Furthermore, the islands developed specialized financial services. They became a hub for captive insurance, where large corporations create their own insurance subsidiaries to insure their own risks. This allowed them to retain profits that would otherwise go to external insurers and benefit from the Caymans' favorable tax regime. Hedge funds also found a welcoming environment. The Cayman Islands offered a straightforward and flexible regulatory framework for fund formation, making it an appealing domicile for complex investment vehicles. This facilitated the rapid growth of the hedge fund industry in the late 20th and early 21st centuries. The evolution wasn't without scrutiny. International bodies and governments have frequently criticized the Cayman Islands and other similar jurisdictions for facilitating tax avoidance and potentially illicit financial flows. Calls for greater transparency have led to various reforms, though the core structure remains. Initiatives like the Common Reporting Standard, CRS, and the Foreign Account Tax Compliance Act, FATCA, have pushed the Caymans to adapt, increasing information exchange with other countries. The landscape continues to shift, balancing the appeal of financial freedom with global demands for accountability. Today, the Cayman Islands remain a significant player in the global financial system. Its journey from a quiet Caribbean outpost to a major financial center is a testament to how specific legislative decisions, coupled with global economic shifts, can profoundly reshape a nation's destiny. It's a complex interplay of sovereignty and international finance. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe if you're curious about the intricate legal and historical mechanisms that shape our financial world. This video is for educational and informational purposes only and is not financial advice. Always do your own research.